Guys, welcome to a brand new episode of Smart Money. Now, can you own part or a unit of a home if you can't afford the full home? The answer is yes. Today we're here to talk about fractional ownership of real estate. Now, the fractional ownership market in India is currently valued at $500 million and is poised to surpass $5 billion by 2030, which is a 10-fold growth according to analysis by JLL PropShare. This week, SEBI introduced guidelines for small and medium REITs to regulate fractional ownership of real estate. The minimum subscription amount for an SM REIT's initial offering is 10 lakh per investor, offering a more accessible entry point than the current norm. Today, we try and understand how to navigate this market. We have some key stakeholders joining us. Gulam Zia, Senior Executive Director at Knight Frank India, Anand Narayanan, the founder of AltDRX, Saurabh Vohra, who's the co-founder and CEO of ALYF, and Sudarshan Lodha, who's the co-founder and CEO of Strata. So across the ecosystem, I have four of you here. Thank you so much for taking the time out and joining me on the show. Gulam, first let me start with you. Just set the context, right, for the uninformed. What exactly is fractional ownership and what are the different companies that are into fractional ownership now?
Well, forever, the investments in real estate, especially housing, were supposed to be very high capital requirements for individuals I'm talking about. Of course, institution has a different view altogether. But for people like you and I, investing in real estate meant buying a house to start with or maybe a shop somewhere. But then while REITs came in some time back, that was something which was giving a ray of hope for normal, regular investors like most of us, that we can also come into real estate someday. But even that was again an institutional play with very large entry capital required. Now this SM REIT that has now come about, SEBI's recent changes that have come in, are opening up a new platform altogether, almost a new asset class, which is fractional ownership of real estate for most of us who want to really widen the scope that we have for investments. So this is really I would say, a very great opportunity for all of us to also look into this asset class. Of course, it's going to take some time for us to understand and learn, but at least it's a great opening, and I'm sure you have many of these stakeholders already on the platform. And going forward, while your normal REITs are very difficult to enter into, but this is something which is opening up a new arena for all of us.
Okay, so there are different modes of investing into, doing fractional ownership, right? So there is fractional ownership in commercial real estate, there is fractional ownership in holiday homes, for which Saurabh of ALYF is here with us. And of course, there's within commercial and within residential, there are many more options. So, Saurabh, you tell us, you are into holiday homes fractional ownership. Very interesting concept. So if I can't afford a holiday home in Goa, what I can do is buy a part of the home, but I can also use that home to go and holiday. So tell us a little bit about what the benefits are.
So, Sonia, basically we started ALYF with an objective of democratizing this holiday home to the population of the country. Currently, only 0.1% population of family own a holiday home. So this asset class has always been limited to only HNIs and ultra HNIs of the country. So with ALYF, our investment always started at 10 lakh rupees. So with that, you can now own a holiday home, make rental yield out of it, enjoy the capital appreciation, plus get to use it for a few days in a year. Because we always understood anyone doesn't use their holiday home for more than 15 to 20 days in a year. And with an investment like this, it's a mix of both, or you are getting goodness of both the worlds, where you get to enjoy the asset and you make rental yield out of the investment which you do.
Okay, so what are the kind of rental yields that we're looking at if I do invest in a fractional holiday home?
So in a fractional holiday home, you make anywhere the gross return is close to 9 to 10%, which gives you a net return of close to 6-7%, plus few days to enjoy the property yourself. Yeah.
Okay.
So approximately 6 to 8% is what you make out of these investments.
6 to 8%. Yeah. Okay. Let me get Anand Narayanan, of the founder of AltDRX, into this discussion as well. Anand, that seems to be the grouse, right? That if you invest in a residential fractional ownership project, the rental yields are very low. But as Saurabh is saying, in a holiday home, the yields are 6 to 8%. Can you just explain to us, what are the different modes of fractional ownership that I can look at, and where are the rental yields the best?
Thanks for having me on the show, Sonia. Middle India, Sonia, has always grown to stories of your father, grandfather buying a home and it's multiplied several times in value over a span of time, right? I mean, we have not grown to stories of us buying let's say, an office space and becoming wealthy. Real estate is about creating wealth. One component of that, Sonia, is about rental yields, right? So in real estate, I mean, I've been in real estate like the rest of the panelists for several years, and I've realized A plus B in real estate is always 11 to 12%, which would mean that A could be capital appreciation, B could be rental yields. In office assets, it's rental yields are stronger, capital appreciation is a tad weaker. Residential rental yields are a tad weaker, and capital appreciation is a tad stronger. But net A plus B is 11 or 12%. That's how it is. And one needs to go with what conviction is. And people generally, Middle India generally understands residential far more easier. If the attempt is to democratize real estate, which is to allow everybody to participate, then I think Resi is a great way to enter this market.
Okay, so can you explain to us, A, what is the difference between REITs and fractional ownership, right? Where is the liquidity higher? Because people don't even understand the basic concept of REITs, forget about fractional ownership. So can you explain what is the main difference and what are the pros and cons of each?
Sure. So, I mean, REITs is a recent addition, especially the small and mid-sized REITs, where fundamentally the greatest issue with real estate is liquidity, right? It's easy to enter, very difficult to exit. So REITs as a structure give the ability to list a portfolio of assets that have already been fractionally sold into a REIT market. So there are two ways that the regulator is extremely wise regulator. I mean, there are two things that have happened in the recent REIT regulations. One is what kind of assets can be moved into an SM REIT structure. So the defined set of regulations have been put, minimum asset size of 50 crores, minimum investor pool of 200 investors or more. Now, those kind of assets can possibly be moved into a REIT structure. Simultaneously, the regulator has also given a permissive structure, like a conditional exemption kind of a structure, where assets below 50 crores can be done in your existing SPV-based fractional real estate structure. So what this would mean is, if a residential portfolio of, let's say, to begin with 25 apartments built into a portfolio is where you start with, you can start with that, build that asset into a 50 crore portfolio, then eventually you'll be able to move that portfolio into a REIT structure. So it gives you a graduated approach. So where you can start with your fractional real estate model for operators like us, where you pool a portfolio of assets, fractionally sell it by issuing securities to investors, and then eventually move it into a REIT structure. So your current fractional real estate platforms will act as originators of assets, which would then feed a steady stream of new REIT schemes that can come in. Alternative, an asset is already 50 or 100 crores in value, that can be straight away taken into a REIT structure. You can make a public issue too.
Okay, got it. That explains it very well. I want to get Sudarshan Lodha into the conversation as well. He's the co-founder and CEO of Strata Prop, which is one of the largest platforms for doing commercial fractional real estate. Sudarshan, thank you for joining us. Tell us a little bit about commercial fractional ownership. What are the kind of rental yields that I can get? What are the challenges that, is preventing people from investing into this space?
Thank you, Sonia, for having me. So broadly, we identified a very large opportunity when we entered the business almost about 3.5 years back. Is everyone aspires to own these high rent yielding assets or their own offices where they operate from, or the warehouses or the factories where they eat or consume the goods what they are consuming at home and stuff. The idea was, how can we give these opportunities to them? Because for people who make about 25 lakhs to 5 crores a year as an average, these guys, it's not just lifetime's savings, it's sometimes lifetime earnings, which requires you to probably own a floor of this marquee building or, own that building as such. So the idea was that even if when you do that, you're talking about a concentration exposure in one particular asset altogether. So the idea was to offer this where people can have a diversified pool. They have a professional asset manager who can manage it, and a bunch of other things, which comes as pros and cons as part of this. So in terms of the returns, what investors generate is anywhere between 8 to 10% as rental return and about 4 to 5% as annual appreciation. So bang on to what Anand mentioned, 11 to 12% is the bare minimum you would make in real estate in any form, in any manner. If you have a long gestation hold period of at least 7 to 10 years as a return standpoint.
So you're saying even in commercial fractional ownership, 11 to 12% yield is something that I can expect, or is that the best case scenario?
That's your bare minimum.
That's your bare minimum. Okay. Okay, that's pretty interesting actually. I want to know a little more about that. So Saurabh, you're saying 6 to 8% in holiday homes is the kind of rental yield I can get, and you know, Sudarshan is talking about 11 to 12% in commercial. So that's interesting. I want to get more viewpoints in, but let me just take a short commercial break. Don't go anywhere. Lots more coming up. In fact, we have many queries as well that have come in from our viewers and followers. So more on that coming up in a bit. Welcome back. We're talking about fractional ownership in real estate, where you don't need to buy the entire property if you can't afford it. You can now buy a small portion of it or units of it. And we're talking to 4 gentlemen who are a part of this ecosystem. We have a lot of queries that have come in from our viewers, our followers. So let's get straight to it. Mukul Kapoor has written to us where he says that residential yields are very low in fractional ownership. What is your view on that? Gulam, I want to come to you on this because, I mean, I'm sure, you know, he's talking about the fact that in general, residential yields are very low in India, right? It's not just about fractional ownership. Your thoughts?
Indeed, Sonia, and that's exactly what I was referring to. We need to do a lot of awareness campaigns around it, you know, because on one side, the concept that residential yield is about 2 to 3% has been kind of drilled into the mindsets of everybody around. And that is something which needs huge change, because all these fractional ownership concepts, and especially the small SM REITs that is now SEBI has launched, is actually opening up a new arena altogether, as I said earlier. But all of us, all stakeholders have to come together and educate investors that this is a different asset class, not comparable to what you would do on your own. Because then you're bringing in experts who are actually going to manage the property. You don't have to take all that pressure. Somebody else is doing it for you more professionally and getting you better returns than what you could have done at 2 or 3% that you would have done on your own. So that change has to be brought about and to be brought into the market. And the step today is definitely going in that direction to educate individuals out there.
Okay, there's another query coming in from Bopanna Munappa, who says that under the residential segment, are RERA approved plotted developments and farm plots a part of SEBI defined fractional investment? Anand, do you want to take that query?
Yeah, I think that's a good question. By and large, today in the SM REIT structure, it is very clear that the property has to be ready and the property needs to be income generating property. So a plot, more so legal, let alone farm plots, I don't think can be made into a SM REIT structure per se. It needs to be income generating.
Oops, I think there's some issue with your video. I can't either see you or hear you well. So I'm going to, I understood your point though. You were saying that, you know, a plot, a general plot or even a farm plot cannot come under the REIT structure. Got that. Sameep Datta has written to us saying, I do SIPs in 2 REITs mainly for regular dividend income. What is the growth opportunity in this space? Okay, so, you know, particularly for this, do you want to take that question?
Sure. So basically, India today, the 4 REITs which are available, the total market cap is close to $10 billion. So I think so there's a great opportunity. The only thing which the panelists also mentioned, the awareness needs to be there. So what I think the SM REIT will do is, the awareness would be there because the asset size, now they have limited between 50 to 500 crores. So because of that and our ticket investment of 10 lakh rupees, the awareness of the entire REIT would be spread more so that the return opportunity would be extremely high post that.
Okay. Gaurav Bhai has also written to us. He says the problem is no residential or holiday home is at par with inflation. Forget about comparing with the ROIs of commercial real estate. It's not even at par with inflation. I think he's talking about holiday homes, and I agree with that point. You know, if my asset doesn't even beat inflation, why would I invest there?
Absolutely. So again, to answer to what Gaurav mentioned, as ALYF last 1.5 years, our assets have been generating more than 75% occupancy, which leads to a return of close to 7 to 9%, and in places like Goa, Alibag and Lonavala. So I think so the awareness needs to be there. There needs to be a lot of things to be done on the rental side of the property. So I think so the difference between commercial and holiday home is you need to look at a player in holiday home who's able to generate that kind of rental yield. Whereas in a commercial REIT, you already have a tenant who's giving you a fixed rental. So I think so here, the variable becomes who's the operator who can generate that kind of rental yield for you.
So that's a bit more risky, right?
Yeah, that's risky. So you need to be very careful on choosing what REIT or who's the operator who's going to operate your assets so that the right rental income can be generated out of it.
Okay, that's a very interesting point. Praveen Chaudhary has written to us. I think he's referring more to the commercial part of, fractional ownership. He says, can this lead to predatory corporate buying in real estate assets and pricing out of end-use buyers? Can this also lead to predatory rental practices like the ones that are common in the US? Now, this was my question as well. Sudarshan, I want you to come in on this. If we, if this fractional ownership opens up in the commercial space, do you think there's a possibility of predatory buying?
See, today let me just speak for myself first. Right? Today we manage about 1,600 crores, 1,700 crores in terms of AUM. Now, in a city like Bangalore, it's probably one building which has more than 400, 500 such buildings available for you to buy, right? So predatory buying in the US is a very, very large thing, especially in home buying segment over there, where there's a very large opportunity, which a lot of these listed entities have seen this opportunity. India, in general, we are 50% developed, in my view. For us to reach that $7-10 trillion mark, what the economy will be there, 50% of India needs to be developed. Us as REITs put together, like I said, 4 REITs today are about 1.3, 1.4 lakh crores, which is less than, about close to about $10, $15 billion or $20 billion tops. The market opportunity is probably 100 times of what it is as of today, right? So given or will be for the next 5-10 years. So given an opportunity, the amount of money which has to be with 5, 7, 10 players who are going to run this show to ensure that predatory corporate buying can happen and can inflate those rents are going to be very, very difficult in a large way. And in general, the occupiers in India are very, very smart. And if given an opportunity, they'll keep swapping offices if they find something cheaper also at any point.
Okay, that's interesting. I wanted to talk about asset tokenization as well with Anand. But before that, Gulam, I wanted your thoughts on what Saurabh was saying, right? Which is very important. If when you're investing in a REIT or when you're putting your money, you need to know who are the operators of those properties, who are the guys that are, responsible for that. Because as an investor, in any case, sometimes you don't know where to find such resources to understand how these properties are functioning. Sometimes these properties are in different cities altogether, different states. Then what do you do, especially holiday homes? What is the best way to approach it?
Well, to me, the most important part is, of course, branding. Like something which I wanted to bring up even earlier. When you're talking about the listed players, those 4 or 5 big REITs that you're talking about are big brands, whether it is Blackstone's or Brookfield, etc., are globally well-known players. And well, that's where your returns are also slightly lesser than what if you go for a private REIT. So about, I think, 6.7 to 7 is what is the maximum range that these listed players are offering you as returns, whereas the private players are going even touching double digits. So there's the difference. Now, that's exactly where earlier we spoke about the risk factor also. And that's what people are actually getting the returns for. So if you're going for, like most of these names that you're right now talking about are not as well-established brands. Like even the concept of holiday homes, we are talking about pricing, variations, etc., etc. Especially talking about Goa, in peak seasons, you may not actually find a good property even if you're paying 25,000-30,000 rupees a room night. And that's where pricing can go up and down. And that's where some good players will have to ensure that prices remain above a certain range. And that's where branding comes in the picture. So for me, right now, the big confusion, time to come in next short to medium term, will be how do I recognize or identify these brands? These brands have a long way to go to compete with or compare with the global brands like Blackstone's, etc. So in the meanwhile, you have to continue to put your focus on educating people and creating brand awareness.
Okay, there are many companies. Like quickly, Gulam, last word from your end, since you said brands are important. There are many companies doing the work, right? There's, of course, Strata, there's HBits, there's ALYF. I mean, for the average investor who's starting afresh, where do they look? What do they look at?
Honestly, I am not in a position to comment on this right now because it will be like proposing or putting my money behind something on this show. But as I said, it's just about right now, none of these brands are as big compared to what the others are. And I would still believe that going forward also, next couple of years, we'll have a tough time to sell this concept.
Okay, so you're saying there's still more education that's needed for, awareness that's needed in this space, right? Hopefully, we are bringing that awareness to the table to our viewers and our followers. Gentlemen, thank you so much. We've run out of time, not out of questions, but thank you so much for joining us. And thank you, Saurabh, for coming to the studio.
Thanks a lot, Sonia. Thank you for having us here.
Okay, well, with that, it is a wrap on this edition of Smart Money. Thanks a lot for watching. Have a great weekend.